Welcome to the Deep Dive. We're here to cut through the noise and really get to the core insights from your source material. Today, we've got a really interesting deep dive into Mphasis Ltd's Q2 results for fiscal 26. But this isn't just about the numbers. It's about a big strategic play on artificial intelligence. We want to see if it's actually working.
That's right. We've waded through quite a bit for you. The auditor's report, the financials themselves, the investor deck, and the earnings call transcript. And the theme that just jumps out everywhere is Mphasis saying they're recoding the business with AI.
Okay, so our mission today is pretty clear. We need to look at the audit details, the operational numbers, sure, but mainly focus on that forward-looking strategy. We want to understand how this big, multi-year AI focus is impacting their deals, their pipeline. Basically, are they set up for this next wave of transformation? All right, let's start with the hard data. The financials for the quarter ending September 30th, 2025. They look strong on the surface. Total revenue hit $445 million. Management was quick to point out that's their highest quarterly revenue ever.
It is. And the growth seems to be coming from the right places. If you look at constant currency, taking out the FX noise,
Right.
gross revenue grew 2.0% from the previous quarter and 6.0% compared to the same quarter last year. Solid numbers.
Yeah, it feels like everything was hitting a high note. EPS, earnings per share, that grew over 10% year over year to about 24.7. Also a record, they said. But Mphasis always emphasizes direct revenue, right? That's their main strategic focus. How did that do?
That also looked good. Direct revenue was up 2.2% quarter over quarter and 7.9% year over year in constant currency.
So strong growth figures. But here's something I found interesting. They're making this huge AI deep bet, as the CEO calls it. That usually costs a lot up front. You'd think it would hit margins. But the operating margin was stable, 15.3%.
Yeah, that is pretty interesting, isn't it? Holding that margin while funding a major strategic shift. It suggests a couple of things. Maybe they're already seeing some efficiency gains from AI offsetting costs. We'll get into their platforms later. That might explain some of it. But also, management seems confident. They kept their target operating margin band exactly where it was, 14.75% to 15.75%.
So they see this AI investment as, what, immediately paying for itself? Or at least manageable within their current structure?
Seems like it. They don't seem worried about it dragging down profitability, which is quite a statement given the scale of the bet.
And that confidence shows up in their guidance too, right?
Absolutely. They're forecasting growth to be more than double the industry average. They feel their H1 performance really backs that up. Oh, and we should quickly mention the audit. BSR & Co. LOP gave it a clean opinion, confirmed everything adheres to the accounting standards and listing rules for that 6-month period. So, yeah, the financial base looks sound.
Okay, solid financials. But that doesn't explain the acceleration we seem to be seeing. How much of this record revenue, this pipeline growth, is actually because of that big AI bet?
Right, perfect transition, because this strategy isn't something they just decided on last quarter. It's been building. CEO Nitin Rakesh actually traces it back almost a decade. Gen 1 started with their Next Labs R&D hub way back in 2014, 2015.
Okay, so it's been a long game. And then Gen 2 brought in hundreds of AI models, platforms like Deep Insight, HyperCato. This sounds like they're trying to weave AI into everything they do, not just offer it as a separate service.
Exactly. It's about embedding it.
Yeah.
And the latest iteration, Jet 3, is this big launch. Mphasis Neo IP. Think of it as a unified AI platform. It uses these purpose-built agents designed to speed up enterprise transformation and what they're calling intelligent engineering.
They use some pretty punchy phrases for Neo IP. Software will now eat software, and AI without intelligence is artificial AI, software eating software. Does that mean they're telling clients to just rip out their old systems, or is it more gradual?
It's more like perpetual redesign. They view existing software not as static, but as something that needs to be constantly improved by AI itself. Continuous transformation is the pitch. And that second phrase, AI without intelligence, is artificial. That's key. They believe standard AI isn't enough. It needs deep context.
Intelligence needs a source, right? So what's powering Neo IP? What gives it that intelligence?
The core engine is something called the ontosphere. It's a bit abstract, but think of it as a living, dynamic map of the client's business. It uses knowledge graphs, understands the specific industry context. It's not just running algorithms on data. It knows the business. That allows the AI to act much more intelligently, you see.
Okay, that makes sense. That deep context would be crucial for winning those big transformation deals. The sources mentioned an insurance client case study. Did they actually deliver efficiency gains there? Is this real or still theoretical?
Oh, it's real. And the results are impressive. It was an integrated ADMS deal application development and maintenance. They used parts of Neo IP, including a specific tool called NeoCruxa.
Neocrux? Is that like the hands-on part of the platform?
Pretty much. The key thing about NeoCrux is that it's a plugin. It slots right into the developer's environment, and it integrates with tools they already use, like GitHub Copilot. So it injects Mphasis' AI smarts directly into the coding process itself.
Ah, so it's embedding intelligence right into the workflow. That's clever. What were the results, the actual numbers?
This is where it gets really interesting. They reported a 20% to 30% boost in SDLC productivity. Developers delivering more, faster, better quality, and maybe even more importantly, about a 60% reduction in technical debt. Freeing up that much resource from just maintaining old stuff, that's huge for innovation. But these aren't small tweaks. These are major transformation impacts.
Okay, that's the strategic evidence, but did it translate into dollars, into deals? The numbers here are, well, pretty staggering. Record TCV wins total contract value in their direct business. $528 million in Q2. And get this, 87% of that was in new-gen services.
And it's snowballing. The TCV they won just in the first half of this fiscal year, about $1.3 billion, is already more than they won in all of FY25. They're closing bigger deals faster. It really suggests the market is buying into this Gen 3 AI approach.
But the number that just screams validation for the AI strategy is the pipeline. Record levels, yes, but up 9% quarter over quarter, and an incredible 97% year over year.
Yeah, just let that sink in. Nearly doubling the sales pipeline in just 12 months, that is seismic. It completely justifies that long-term investment in building Neo IP. If there's one headline figure, maybe that's it.
And crucially, what's in that pipeline? 69% of it is AI-led. That's the proof, isn't it? The AI bet isn't just a cost center. It's generating massive new opportunities.
Exactly. That 69% tells you clients aren't just looking for an AI tool here or there. They're buying into that bigger idea of perpetual intelligent engineering. Mphasis is clearly competing and winning at the very top end of the market now.
And they're closing big deals, too. 6 large deals in Q2 alone. One over $100 million with a new BFS client, plus 2 more over $50 million. Winning deals that size shows they have the chops for these huge, complex projects.
And it's not just one sector. The growth is broad. Looking at direct revenue, constant currency, YoY, insurance up over 32%, TMT up nearly 27%, BFS up over 17%. The whole BFSI group, banking, financial services, insurance grew at a compound quarterly rate of 4.7% over the last year. They called that market leading.
Okay, but there was one weak spot, right? Logistics and transportation, a sharp decline there, negative 56.5% YoY and direct revenue. What's happening there?
Yeah, that's the clear outlier.
Yeah.
Management did say they expect sequential growth to return from Q3, so maybe it's stabilizing or some specific deals are landing. But overall, the picture across clients is strong. They mentioned strengthening the client pyramid, adding clients in all the big revenue bands, $10 million plus, $20 million, $50, $75, even $100 million plus clients. And their top 10 clients grew nearly 11% over the last 12 months. That's a healthy sign for stability and future growth.
Okay, before we wrap the financials, let's touch quickly on structure and operational health. It's a big company, right? 44 subsidiaries listed, Mphasis Corp, Digital Risk, Blink Interactive, plus a new associate, Aoka Inc.
Yeah, it's a complex global setup. Requires really robust oversight and accounting. Operationally, one metric did move. DSO, days sales, outstanding. It went up by 5 days to 89 days.
DSO going up. Usually that raises eyebrows, slower collections, cash flow issues.
Normally, yes. But the sources actually frame this differently, and it's quite interesting. The increase isn't because clients aren't paying. It's apparently linked to the type of deals they're winning. They're doing more fixed-price contracts, more milestone-based projects. Those contributed over 50% more to revenue year over year.
So instead of smaller, regular checks, they get bigger payments when they hit major project milestones?
Exactly. So the money sits as a receivable for longer while they work toward that milestone, pushing up the average DSO. So counterintuitively, it actually signals bigger, more strategic deals based on outcomes, not just billing hours. A sign of maturity, really.
That makes sense. It turns a potential negative into a positive indicator. Okay, and briefly, the oversight roles mentioned in the audit report.
Yeah, it clearly lays out the responsibilities. Management and the board handle preparing the financials, making sure the records are right, and assessing the company's ability to operate as a going concern.
And the auditors, BSR & Co. LLP, provide that independent check.
Right. Their job is to provide reasonable assurance the numbers are free from material misstatement. They use professional skepticism, looking at especially for fraud risk. The report also listed the standard safe harbor risks, currency fluctuations, Wage inflation in India, immigration rules, reliance on U.S. clients. Pretty standard stuff for a global IT firm. Hashtag AdTag outro.
Okay, so let's bring this all together. What's the key takeaway for you listening to this? Emphasis delivered record results, revenue, EPS highs, stable margins. But the real story here is that the big AI deep bet seems to be paying off handsomely. That huge pipeline growth, nearly 70% AI-led, driven by platforms like NeoIP. That validates the strategy.
Absolutely. And that core idea they keep pushing, software will now eat software. The need for continuous intelligent engineering suggests something broader. For any business looking ahead, maybe the competitive edge isn't just adopting an AI tool. It's about constantly redesigning your whole operation to leverage the intelligence AI keeps generating.
Perpetual.
Perpetual continuous evolution.
Hmm.
That's what they're selling. Not a one-off fix, but a constant state of becoming smarter. So our call to action for you today, building on that, think about your own field. What processes are ripe for that kind of perpetual intelligent engineering? Where does your operation need its software to start eating itself, metaphorically speaking?
Something to think about. Thanks for joining us for this deep dive.